The stock market, a beginner's guide to investing in stocks. For the uninitiated, the stock market may be a perplexing area. The common investor is sometimes befuddled by financial news befuddling terms. Tales from the trading floor of treasury shares, stated value, and retained earnings are often meaningless. Understanding and using such concepts, on the other hand, is critical for individuals wishing to trade equities. While investing in stocks carries the danger of losing money, it may also be a good method to build wealth, and a well-balanced stock portfolio can be a ticket to a steady passive income. Getting started in stock trading, key points to consider. What exactly is the stock market, and how does it work? What is the best way for a stock trader to make money? What does it take to get started in stock trading? How do you choose the best stocks to invest in? Before you trade stocks, there are a few things you should think about. How does stock trading work and what is the stock market? To become a confident stock trader or investor, you must first understand the fundamentals of the market and how stock trading works. What is the stock market, and how does it work? Individual and institutional investors buy and sell stocks on the stock exchange. In the current day, prominent stock indices such as the Nasdaq 100, FTSE 100, and DAX, which each represent the performance of a basket of constituent equities, are used to carry out the procedure electronically. The market index keeps track of these stocks in order to calculate the index's value using weighted market capitalization methodology. This means that a substantial price change in a single large stock can have an impact on the index in which it is listed. What exactly are stocks? Stocks are essentially the company's ownership certificates. They are issued by a corporation to raise funds for expansion, and their value fluctuates based on the firm's performance. They can be public, listed on the stock exchange, or private, only available to private investors, OTC or over-the-counter stocks. Boeing, Xerox, and Apple are among the most widely traded equities, with the latter listed on the Nasdaq 100, Dow Jones, and S&P 500. Product launches, new CEO appointments, and earnings announcements are all examples of events that can impact a stock's price and influence a stock's purchase decision. More on these variables can be found in the section below under How do you pick the correct stock? Shares, on the other hand, relate to one's proportional ownership of a company's stock. For example, an investor who owns 50,000 shares of a corporation with 1 million outstanding shares has a 5% ownership position. How are stock prices determined? There is a crucial distinction to be noted between trading and investing when it comes to approaching stocks. Trading. By speculating on assets over a shorter duration, a trader can possibly make or lose money. Traders may frequently use tactics such as scalping and day trading to focus on technical patterns, generally employing short-term time frames such as 10-minute charts. Traders can track the performance of their stocks, as well as their entry and exit prices using online trading platforms. Investing. An investor can possibly profit from stock trading by purchasing the asset, usually through a brokerage account, and keeping it for a longer period of time. During this time, he may be looking for dividends and interest, as well as long-term capital gains, culminating in the sale of the stock. Holding a stock for at least 5 years is part of the buy and hold strategy. Focusing on a total return involves factoring in interest, dividends, distributions, and capital gains when evaluating the total return from a stock. What is the best way to start trading stocks? A trading platform/online brokerage account, which can be set up simply with proof of ID, and a financing method of choosing, is the simplest way to begin trading or investing in stocks. For more active traders, finding a low-commission broker is critical because they will naturally pay a higher commission than those who trade less frequently. Investors must also choose between individual equities and mutual funds. As previously stated, individual stocks represent a stake of a firm, whereas mutual funds pool a variety of equities, with managed funds aiming to outperform the market and exchange-traded funds or ETFs tracking an index. A checklist for getting started in stock trading. Set trading objectives. Select the appropriate broker. Look at important businesses. Maintain a well-balanced portfolio. Risk management should be practiced. How do you select the best stocks to trade? When it comes to picking the correct stocks, market participants may find it advantageous to stick with companies they are already familiar with. It may also be beneficial to consider aspects that help determine the likelihood of its price rising. These elements include the company's financial health. What does the balance sheet of the company look like? Have you seen an increase in income and profits in recent years? What is the total amount of debt it owes? Is it a source of efficiencies? Levels of innovation. What new goods or plans for expansion are in the works? How does it compare to competitors in terms of customer satisfaction? Is it in a good position to pivot and respond to new market demands? Dividends. Will a company's dividend be increased if it already pays one? What is the frequency of dividend payments? Is it undervalued in terms of price and valuation? A price-to-earnings ratio, or PE, can be calculated by dividing a company's current stock price by its earnings per share to get a better picture of this. A PE of 15 is frequently seen as cheap. However, due to the slower growth, it may be inexpensive. It would be worthwhile to look for cheap stocks that score well in as many of the aforementioned categories as possible. Calculating total assets on a balance sheet, minus depreciation and liabilities, can also be used to determine a company's fair worth. Liquidity. Liquidity refers to equities with sufficient trading volume to allow traders to easily enter and exit positions. ExxonMobil, General Electric, and Alibaba are examples of liquid stocks. For a more thorough view, read more about stock market liquidity. Volatility. Stocks having the largest potential for considerable price movement are said to as volatile. Investing in a volatile stock might be dangerous, but it can also pay off handsomely. To learn how, read more about stock market volatility. Another factor to examine is how the stocks fit into a portfolio. For example, a strategy could be to invest solely in growth stocks for high capital gains, or to invest in dividend or defensive firms for more security. Things to think about prior to trading stocks. Before investing in stocks, traders and investors should have a clear grasp of their objectives, the amount of money they are willing to risk, their trading style, and how to diversify their portfolio. 1. What are the objectives? How long do you think the money will be locked up? What do you intend to do with the funds? Is it possible that the funds will be required before the investment appreciates? If someone is saving for retirement, investing in stocks, for example, may be a suitable option because it is a long game. However, if that person wants to save money for a down payment on a house next year, they should choose short-term stock trading or another asset. 2. How much money will be put on the line? Market participants should think about how much money they have to trade or invest. A reasonable amount might be 5% of annual earnings, but everyone's situation is different. When it comes to risk, the more you know about industries and the companies that make up those industries, the better prepared you'll be for the inevitable market fluctuations. 3. Controlling emotions. When trading, it's critical to keep your emotions under check. When trading stocks, there will be a deluge of market data, much of it useless, during the duration of an investment. A trader or investor must be able to sift out rumors, conjecture, and noise in order to avoid allowing FOMO to influence their stock trading decisions. It's critical to keep emotions in check and stick to your original rationale for buying the stock. There will, of course, be stocks that do not perform as expected. It's crucial to be able to deal with setbacks. 4. Is the portfolio well balanced? To hedge against bad events, a diversified portfolio may include owning/trading equities in a number of companies across several sectors. Bonds, currency, and commodities are some of the other assets that could be examined. Questions and answers on the stock market. What is the significance of the stock market? Businesses, individuals, and economies all benefit from the stock market. It enables firms to raise funds for expansion while also spreading their risk. It allows investors to possibly earn returns on their investments and grow their wealth, as well as the economy to profit from domestic and foreign cash infusions. The stock market is also a gauge of economic health. Its movements can aid in the understanding of business cycles and the forecasting of future policy. The performance of pension funds and other assets is tied to stock market performance. What's the difference between a trader and an investor in stocks? A stock trader may try to speculate on an asset in the short term, which might be as little as minutes, whereas an investor will strive for a buy and hold approach that will see the company's value increase over time, while also receiving dividends. Why should you invest in stocks instead of bonds? While stocks indicate a corporation's ownership position, bonds are a sort of loan issued by a company or government that pays interest on the debt. Bonds are thought to be safer than equities. They do, however, typically return lesser yields. What are the different stock types? Growth stocks, dividend or yield stocks, and defensive stocks are the three basic categories of stocks, each with its own set of qualities to learn about. Growth stocks are stocks purchased only for the purpose of capital appreciation. Companies will reinvest profits rather than pay dividends, leaving capital gains as the only way for investors to profit. Growth stocks are inherently risky as a result of this. While capital losses are possible, the potential payout from equities that are predicted to expand rapidly can make this risk worthwhile. Dividend stocks, also known as yield stocks, have paid dividends to shareholders on a regular basis, typically quarterly. This means that if a corporation pays a 10 cents per share annually dividend, it will pay a quarterly dividend of 2.5 cents per share. Healthcare, consumer staples, and utilities are examples of defensive stocks, which have consistently high demand for their products and services regardless of the status of the economy. This makes them perfect for analyzing during recessions, but they may not be the best choice for bull markets in general. Which stocks are best for beginners? As previously stated, the greatest stocks for beginners are frequently firms that they are familiar with, therefore it's a good idea to start with stocks that you are familiar with. Facebook, Alphabet, parent company of Google, Amazon, and Nike, are among the most popular companies by volume, with 5-year returns in the triple digits. The stocks are all liquid, which means there is enough volume of buyers and sellers to ensure entering or exiting a position at the predicted price, and avoiding slippage for traders who are more interested in the short term. How many shares should a novice purchase? A popular topic is how many shares a beginner should acquire. However, it's better to focus on the total share value rather than the quantity of shares. For a broad portfolio, capital is frequently divided among stocks from a variety of companies. Additional stocks and global stock market indices reading. Understanding the stock market entails comprehending the basic elements that influence its performance. Explore a rich history of big financial bubbles and events that sent shockwaves through the financial globe by reading our guide to the stock market and interest rates.